me say, I want to believe that some of us are already solving questions we're practicing. Please, we need to do more because it is what we persist in doing that becomes easier for us to do. So if we do not persist, there is no way it becomes easier. So that's very important. In the light of that, we'll be looking at the question which I sent to the group tonight. And let's solve that question. Okay. As we solve that question, I'm also going to discuss perhaps common pitfalls and errors that anybody may encounter. Okay. So let's talk about that. Anybody who's there can help us do the reading of the question, please. That's question 1, November 2017. I should not use up to 1 hour 30 minutes on this question. And somebody do the reading.
The following are the financial statements of Papa, Tata, and Chebe, all PSCs, as at March 31st, 2017. Then we have their information, their financial statements, and stated below. Then you are provided with the following information, which will be relevant to the consolidated financial statement of Papa PLC. Number 1, Roman numeral 1, none of the companies has issued any additional share capital since April 1, 2014. 2, the financial statement of Papa have not yet been adjusted for the gain or loss arising on gaining control of Tata. 3, at April 1st, 2014, the carrying value of the net asset of Tata was the same as their fair value of 325 million. 4, Papa PLC wishes to use the full fair value method of accounting for the acquisition of Tata, and at April 1st, 2016, the estimated value of Goodwill attributable to non-controlling interest was 3 million naira. The estimated fair value of the initial investment in 30% of the shares of Tata was 150 million at March 31st, 2017. 5, included in the tangible non-current assets of Tata is land valued at cost, which on March 31st, 2017, had a fair value of 25 million naira, in excess of its carrying value. There has been no subsequent significant change in that value. 6, April 1, 2016, the fair value of Chebe land was 16 million naira, in excess of its carrying value. There has been no subsequent significant change in that value. 7, goodwill arising on acquisition is tested for impairment at each year end. At March 31st, 2017, an impairment loss of 50 million naira was recognized for Tata. 8, there has been no impairment of investment in Chebe. Required, prepare the consolidated financial position of Papa Group as at March 31st, 2017.
Has anyone attempted that question before? Has anyone attempted the question? What is hashing? All right, we've not attempted the question. So, all fine and good. Let's attempt the question. All right. This question, it's a simple one, but let's look at it together. Hold on, please. I'm trying to. To set my screen. Okay, good. All right, so this question actually is a piecemeal acquisition. Are we together?
Yes.
And when we say piecemeal acquisition, the acquisition was done in parts. Are we together? So it was not just done all at once. It was acquired over time. All right. So if you look at the business, let's look at it. This is Papa, right? We have Papa, Asat, Ata, and Chibi, right? As at 1st of April 2014, how many percent does he have in? How many percent does Papa have in Tata? It was 30%, right?
30%, yes.
That 30%, does he have control as at then? No,
No.
not at all, right? So it was just an ordinary, it was an associate, okay? Tata was an associate to it. But as at 1st of April 2016, it was able to acquire how many percent?
50%.
50 more percent. That makes it 80%. Okay.
Yes.
And then in Chibi,
Yes.
it was what? 25%. Are we together?
Yes.
So this was subsidiary to him. This is what?
Associate.
Associate.
An associate. All right.
Yes.
Are we together? So
Yes.
let's begin to look at the financial information. All right, or we can even move forward. Let's get the subsidiary. Let me do this. Subsidiary net asset schedule. Okay. The subsidiary. We have at acquisition. All right. We have at our reporting. And we have the post-acquisition reserve. This is in relation to Tata, okay? I think our Naira is in million. Naira in million. Naira in million. So, if you look at additional information, none of the company has issued any additional share capital since what? 1st of April 2014, right? So, yes. It's reasonable to conclude that the OSC has been the same. No, be sure.
Yes, sir. Yes.
So at acquisition, it would be 240 and then 20, 240 and what? 20. Let's look at retained earnings. Retained earnings for Tata at reporting is 210, right? At acquisition, do we have the value? At acquisition, do we have the value?
Yes, we have in part.
You see?
The return earning asset.
All right, let's continue. Don't worry. If you look at the question, I've not seen anything that looks like we have the value there. Okay. But let's see what we have again.
Putting all is in purchase consideration.
We are looking for value of retained earnings. So if you look at that question, it's not given to us. Okay. But now, what are those things that affect? Is there any other thing that should come to the subsidiary net asset schedule? Do we have fair value adjustment?
Yes, I think we have.
Yeah.
Okay, that's which additional information.
Intangible land, additional information 5.
Okay, can we read it?
Included in the tangible non-current asset of Tata is land valued at which on 31st March 2017 had a fair value of 25 million naira in excess of its carrying amount. There has been no subsequent significant change in that value.
Okay, so what can we pick out from there? So how do we treat that? How do we treat it? Let's talk. How do we treat it?
So the 25 million naira excess has not been recorded, so we have to recognize it in the calculation of the net asset of the subsidiary.
Okay.
Yeah, you debit the net asset of the subsidiary and credit.
So am I bringing it at the acquisition and reporting date?
Yeah.
All right. Let me explain something to you. Are you with me?
Yes,
Yes, sir.
Good.
Very
Myself and Mr. KABIRU, we're looking at this question together. That additional information 5 looks really ambiguous, okay? And most likely that diet, anybody who will solve that question may likely have an issue, especially with that additional information 5. Are you with me?
Okay.
I'll solve it this way, just for the sake of it making sense. But if you look at that additional information 5, it said included in the tangible non-current asset of Tata is land, valued at cost, which on March 31st, 2017, right? Has had the fair value of how much? 25
million.
When was that value derived or arrived at?
I think it's in 2017, Abi.
31st March, right?
2017.
When was the real acquisition date? 1st of April 20 what? 2016. The acquisition, that is when the Tata became a subsidiary. That was 2016.
2016. Yeah.
This is what should have been the case. Maybe they say 31st of March 2016. By saying 31st of March 2017, it is actually not. So that is the problem as much as I can see in that question. Are you with me?
Yes, sir.
Yes.
It's actually,
Sir.
so because by that wordings of which on 31st March 2017, that was a report. It was not the acquisition date. Are you with me?
Yes.
So take this as an exemption, because without this, what I would do would be much more different from what from what you see in the solution. Although their solution does not always look straight away. Are you getting me? But what I try to do is that any question I have to solve for you, I'll solve it the way I've taught you, just for consistency's sake. Are you getting me? But I try to make sense from what they do from their own solution. But that part of the question, it's where a very bigger problem lies. But let's move forward, okay? So I said, let me explain that, all right? Just for clarity's sake, even though none of you mentioned it. So that I will not be a tutor who just say it just for the sake of it balancing, but for the sake of you being able to apply, how will I put it? I don't know. Anyway, let's go ahead. Now, so for acquisition, I think we're given one information here. We're given the fair value of net assets as at 1st of April 2016. What's the fair value of net assets?
460 million.
460, good. So,
Yes.
so it means that the balancing figure will be the retained what?
Earnings.
Hope it makes sense.
Yes, sir.
Yes.
Because we are already given the balancing figure will give us the retained what? The retained earnings. All right. So 460 minus 25 minus 20 minus 240. That gives us what? 175. And this one will be how much? 240 plus 20 plus 210 plus 25. That will be what? That should be 306, right? How much is that?
495.
495. Oh,
Yes.
sorry. Where did I make my mistake? Okay. 495.
Yes.
So that 495 minus 60 will give us 35, right?
Yes.
Good. So, okay. So let's do Goodwill, okay? Look at the question. Were we given?
What about additional information 6? Additional information 6.
What's there?
Okay, sorry.
That's Shidebe. That's related to Shidebe. Chibe.
What is already sleeping? I said I thought I was sleeping. I'm still awake. Let's go ahead with the Goodwill. Normally, what do we do with the Goodwill? You know, we say parent consideration, right?
Yes.
Yes.
How much did the parent pay?
260.
260.
Is it 260? Check very well. Oh. Initially, for the 30%, they paid how much?
120.
120. And then when he acquired 50%, he paid how much?
260.
That makes it how much?
380.
380.
But wait, though. There's something we are missing out. Go to China information 4. I read that part, but I think we are missing it out. China information 4, can somebody read it out for me?
Papa PLC wishes to use the full fair value method of accounting for acquisition of Tata. And at April 1st, 2016, the estimated value of goodwill attributable to non-controlling interest was 3 million. The estimated fair value of the initial investment in 30% of the shares of Tata was 150 million as 31st March 2017.
Interesting. So the initial value of investment, how much?
150 million.
So you don't use the 120, okay? You are given the value.
Okay.
Are you together?
Yes, sir.
And as much you are given the fair value, you use the word fair value, all right?
Yes.
Unless if they say it's the company's policy. If it's the company's policy, you don't argue policy with them. Additional investment purchase consideration. But are we given NCI?
Yes. Yes.
What's the value of NCI?
3 million.
Where?
No, there is
So
goodwill.
additional information form.
It's not given.
In this question, we are not given. Okay?
Okay. Yeah.
We are not given. So what do you advise we do?
Fine. Can we say
All right.
fine NCI?
This is what we need to do, okay? Listen, rather than say we do proportionate share, because we are not even told anything about what the complaint does. We are only given the goodwill, Abi. We are only given goodwill attributable to NCI. Are we together?
Yes, sir.
So we already know that it's a goodwill method. No be so.
Yes.
And for goodwill to be attributable to NCI, it means NCI must have been valued at what?
At fair value.
At fair value. Thank you so
Yes, sir.
much. I wish you had beside me. I can give you. I would have given you 100 naira.
Hey!
100 naira is small. Now $100 you want here, Abi. It's naira.
$100.
So at fair value. So if you are not given, that's what we only do. All right. I think I've solved that method before, but yes, I have. I've used it. We just look at what we just do is this. Let's look at the. We just bring out the fair value of parent. Are you getting me? Fair value of net asset of, let me say, of parent share of subsidiaries net asset. Are we together?
Okay.
So what's the subsidiaries net asset at acquisition? It's 460, right?
60, yes.
So the parent will owe 80% of 460.
60. Okay.
Are you with me?
Yes, sir.
Yes, sir.
And what would be the 80% of 460? So the question itself is not straightforward, although it's not complex, it's simple, but not straightforward.
Right.
That's 368, right?
Yes.
Sir.
So by taking this, it means that we're only dealing with the parents. Are we together? We've taken the assumption or the best judgment that 20% goes to the what? To NCI. Are we
Yes.
together?
Yes.
But it's just better we take such as are you with me?
Yes, sir.
So all right, good. So that's just okay, good. So let's move forward. So 410 minus 368, what do we have?
8.
410 minus
Sorry.
368.
minus 368.
42.
It's 42.
So this will be what? Goodwill, right?
Yes.
Attributable to
NCI.
parents.
Parent.
To parents.
Oh, and that condition. Dates.
Are we together?
Yes, sir.
Then what is goodwill attributable to NCI?
Given in the question,
It's
3
3
million.
million.
It's 3 million. So total goodwill will now be what?
45.
I hope it makes sense.
Yeah.
Is there any impairment?
Yes.
Yes.
Okay. So, by implication, impairment will be shared by the two of them, right?
Yes.
Yes, sir.
Impairment is how much?
15 million.
50 million.
So that gives us what? So goodwill to be
80% of
recognized.
60 million.
Sorry, I have a question.
Go ahead, please.
Is there another way we can actually get this goodwill, total goodwill, apart from this method?
I've thought of if you use other ways anyway, it might really not, because what you want to use the proportionate share. You know what we do before? Let me quickly do. You do how do you call it? You do parent consideration, right? No, be so. You now do either proportionate share of NCI, Abina, or use the fair value method, fair value of NCI.
Yes.
But for NCI to be participating in goodwill, it means it was the fair value, it must have been the fair value of NCI. So you cannot use the proportionate share of NCI. If you do that, you get something different. But if you think there's any other method, you can share, okay? What are you thinking? For you to ask that question, you must be thinking something. Share your thoughts.
No, I actually thought there was another way. That's why I asked.
Oh, so that's the best option we have, because NCI must have been valued at fair value for it to have that goodwill of 3 billion. So any attempt to use proportionate share of NCI is as good as you are not giving NCI. I don't know if it makes any sense. Let me even show you this. Don't worry, let me show you something. Let's see. Parent purchase consideration is 410, right? Let's see. Parent purchase consideration 410. What's 20% of 460? If you use proportionate share, NCI, what's 20% of 460?
460.
That's 92,
90.
right?
Yes.
So subsidiaries net assets is 460, Abby.
460.
What do you have if you add up all of this? 92 plus 410 minus 460. You have
42.
what? 42. Almost equivalent to what we get for parents, right?
Yes, sir.
Yes.
But if you do it this way, you know, when you use proportionate share, it shows that it's only the parent that is sharing what? The goodwill. Are we together?
Yes.
So the difference that NCI must have paid for the value to have additional 3 million is why NCI has this goodwill. I don't know if it makes sense.
Yes.
Are you with me?
Yes, sir. Yes, sir.
I only showed this so that you can understand. So, because when you use proportionate share, NCI does not share in the goodwill. All right? Any questions so far? So we'll be coming to NCI now, right? Okay. Before we now talk of Chibi, okay? All right, let's do NCI. So what is the okay? But okay, so now if we now want to talk of NCI, we don't. So that's what is just so kind of technical in this question. Are you with me? So
Yes.
for NCI, but it's not really technical. What will be we don't know the fair value of NCI, right? Are you with me?
Yes, sir.
Yes.
But we need to get NCI. So what are we going to do? What will be our best option now?
So apply 20% on the net asset of the subsidiary.
Exactly. It's just to apply 30%, 20%. Because we need to get NCI. And as much as the question is concerned, NCI was not given to us. All right?
Yes.
Are you with me?
Yes.
So it was to apply. All right? So let's
Yes.
say we say so that would be 20% of how much?
Net asset 460.
Of 460, right? You know, we always use net asset at acquisition. I hope you're aware.
Yes, sir.
Yes.
That gives us what? 92. And then we now say share of what?
Post acquisition. NCI share of post.
Post acquisition reserve, right?
Yes.
Which will also be 20% of how much? I think 20% of 35, right?
Yes.
Yes.
7. That's 7.
That would be what? 7.
7.
That gives us what? 99. Up to this level, any question?
Yes, sir.
We are not yet different from what we've always been doing. No be so.
Yes.
Yes, sir.
I'm solving it this way so that it can be as much consistent with what I've taught you so far. If you go and check your past question, or let me put it, the solution in that diet, if you're able to make sense of it, all the best.
So are we not bringing the share of goodwill impairment?
Does not
Okay.
make sense.
Good. That's a very nice question. Okay. Which I did not do here, but let me thank you for bringing that to my remembrance, because that is one thing we need to do. Remember that NCI also benefit from where? Goodwill, right?
Yes.
Are you with me?
Okay.
NCI benefit from what? Goodwill.
Goodwill.
And what is NCI share of impairment?
20% of 15 million.
20% of what? 15. What's 20% of 15?
3.
3, right?
3.
Yes.
Okay, so that makes it what? 99.
Okay. The same thing.
The same thing.
99 minus 3.
Should we move forward? All right.
Sorry, why are we adding will again?
Because NCI also has its goodwill. NCI has goodwill as per question.
All right.
Okay. Now, let's now look at associates. Associate is which company? KBIB.
Yes.
Yes.
Now look at investments in what?
Associate.
How do we treat investment in associates? You know, we say what is amount invested, right?
But yes,
Now
yes.
look at the share of what?
Parent share of the investment in the associate.
And we look at the initial investment and we look at the share of profit, right?
Yes.
Initial investment and its share of retained earnings. That's the share of profit, right?
Yeah.
So what are the cost of acquisition of associates? That's 60, right?
60, yes.
Now share of profit. Were we given the profit of the associate?
Not given directly.
Okay, tell me directly then.
94.
You're doing like a politician.
The reserve return 94.
Yeah, but that is retained earnings. Okay, that's okay. Retained earnings is 94. But at the time we bought it in 2016. What was retained earnings in 2016? Do we have it?
No, sir.
We already have retained earnings in 2017. All right.
What of
So
16? Additional information.
yeah, check what's the
The 16, additional information 6.
At 1st April 2016, the fair value of KB's land was 16 million in excess of its carrying value. No information has to retain then. So let's do something. Let's do this. We do KB net asset schedule. Okay. Are we together?
Yes.
At acquisition, at reporting. So we know that none of the company has issued additional share capital, right?
Yes.
So that information will help us. All right, so we can see USC, the share premium. OSC is how much? 230. 230. Retained earnings at reporting date
94.
is 94. We don't know this one, right?
Yes.
I think we're given one information, that additional information 6 at 1st April 2016, right?
Yes.
The fair value of KB's land was 16 million in excess of its carrying value. That is the way additional information 5 ought to have what? Been given. Are you with me?
Yes.
So based on the solution they did, it's quite different from the content of the additional information 5. So I just want to maintain a kind of consistency. If not, I won't even bother doing it. I don't need this 25 year, okay? And when you get to that point in time in the exam, or you don't even know which one you need to do, I think that would be like, which diet or which diet? I know there was one diet that gave us one wrong question like that. All right, let's go ahead. Are you with me?
Yes, sir.
Fair value adjustment, land. The value of land was how much? 16 million, right? And I want to believe it has not changed. What's the total?
246.
This 246. But let's get the reporting. Reporting is how much? $340, right?
Yes.
But what's the fair value of net assets for KB? It's at 1st April 2016. 200, right?
200. Yes.
Good. So retained earnings would have been the balancing figure. Maybe so.
Yes.
So what's the balancing figure?
46. 46.
That is not possible. How will you get 46?
It's going to be negative.
Good. Thank you. Minus 46. There's a difference between 46 and minus 46. Are you with me? So the post-acquisition, or let me say the profit for the year. Are you together? Are you together? So from the time, okay, let me use the word profit for the year. From the time we purchase up to the time we are reporting, right? What's the profit for the year? 340 minus what? 200. That gives us what?
60.
140.
140.
It's as good as saying 94 minus 46. That's 94 plus 46, 140.
Yes.
Does it make sense up till now?
Yes.
So how many percentage do we have in this 140? 25% of 140. How much?
35.
That's for 35. So that in the long run, everything will give us what? 90, 95. Are we together? Are you with me?
Yes.
So I think so far so good. We've computed everything possible except one thing.
Retained earning. Consolidated retained earning.
Or let me say except two things anyway. Which I'm going to show right away now. Okay. Now, as at the time, let's look at it though. As at the time we bought the initial 30%, what was the value? 120, right?
Yes.
Are you all with me?
Yes.
It was what? 120.
You said what was the value
of the 30%? It was 120, right?
Yes.
But we bought it in 2014, but in 2016, it was more or less like revalued, right?
Yes.
That's why the additional information to is saying the financial statement of Papa have not yet been adjusted for the gain or loss arising on gaining control of what? Papa. Are we together?
Tata.
So
Yes.
as at time it was reclassified, we need to compute what? Our gain or what? Or loss. Are we together? So remember in 2014, it was first as an associate. Are you with me?
Yes.
It was first as what? As an associate. So let's look at it. What was the value, Gogo, before it was remeasured to get the fair value? Okay. So we look at the initial cost of investment. Let me write the title on it to get the gain or loss on remeasurement. Investment in Tata. I hope what I'm saying makes sense. So, because this was an associate, then revalued upward, okay? More or less like you transform it. What was our initial cost of investment? 120, right?
Yes.
So what is our share of profit then? You need to be at 30%, right? So we are looking for profits that was made between, when did we buy it? 1st of April, right?
Yes.
1st of April 2014, right? To when did we classify it? Or when did it move from being an associate to 1st of April, right?
2016, yes.
16. That's what we are looking for. No be so.
Yes. Yes.
So let me say I am moving these workings to the next page. Okay. So as to get our what? Share of profit, right?
Microphone is making noise like this.
So I think we already know the share of profit as at, we know the retained earnings in April 2016. What's the retained earnings? 175, right?
Yes.
But we need the retained earnings in 2014. So we use the net asset schedule again. We use the net asset what? Schedule. That's why that additional information 1 is important. What did additional information 1 says?
None of the company has issued any.
none of the company. So the examiner that put it there knows why he put it there. Are you with me? Hope I'm not too fast. Anyway, I'm doing exam style for you. 240 plus 220, right? What are we looking for? We are looking for the retained what? Earnings, right? But what was the fair value of Tata's net asset in 2014, 1st of April?
325.
325, good. And we are not told that. Look at additional information 3. What's it saying there?
At April of 2014, the current value of the asset that was paid at the fair value of 325 million.
It was
Hello,
the
sir.
same. Yes, go ahead.
Somebody's microphone is making serious noise. Can that person help us to adjust the microphone?
Okay, no problem. Please sit with your microphone or help us adjust it. All right. So you see that we are told that the carrying value of the net asset was the same. Are we together? So it means that the balancing figure is only the retained what? Earnings, right? That would be 325 minus 260. That would be what? 60 what? 65. Are we together? So as at 1st of April 2014, retained earnings was 65. As at 1st of April 2016, retained earnings was what? 175. Are we together? So 175. So it means that this will be what? 30% of 175 minus what? 65, right? 175 minus 65. That's 110. What's 30% of 110? I hope I'm working side right. What's 30% of 110?
77.
I'm getting 33.
Sorry.
33. So that will give us what? 153. Okay. So this will be the value of our what? Investment. Are we together?
Yes, sir.
Where did you get that 1.5?
How did I get what?
Where did you get the 175?
What is the retained earnings in 1st of April 2016? You worked it here now. This is it here.
Okay.
I hope you are with me. So this is the value of our investment as at 1st of April 2016. But when the fair value of it was done, what was the fair value? What was the fair value of our investment as at 1st of April?
325.
No, it's
So,
460. 460.
No. Additional information 5. Additional information 4. What was the fair value of that investment?
150.
150.
Yeah.
So if that investment that ought to be 153 is now 150, have we made a gain or a loss?
A loss.
Have we made a gain or a loss?
Loss.
Anybody that said gain, let me just knock his head. Loss of how much? 3.
Okay.
Are we together? I hope you got what I did there, right?
Yes, sir.
Good. So let's move forward now to consolidated what? Retained earnings. Are we together? So I think we have the parents retained earnings as per question. So that one we have no problem, right?
Yes.
As per question, Papa. That is how much? 390, Abby. We have a share of post-acquisition reserve. How much is the post-acquisition reserve that he had here? 35, Abby.
Yes.
So you will take 80% of 35.
Yes.
We have impairment.
Mm.
You will take 80% of how much?
15.
The impairment was 15 now.
Yes.
So we have loss. Loss on how do we put it? Loss on what?
Investment.
30% initial investment.
That's it, yes.
Negative, this should be 12.
12.
Negative. 80% of 35 is how much?
28.
28. Okay,
Yes.
is there another thing we've not considered though?
I don't usually see your board.
You don't see my board?
I think my screen is one that is not.
Certainly it must be your screen. I can say it for if, or it might be that you are, you need to go off and on.
I've been able to problem, I think. Zoom in. Zoom.
What of shop of investment in is it in Tata?
Okay.
That's
so
for the retained
the share
earnings.
of profit in association. We need to bring the second leg. Share of profit. Okay, that's the second leg. In associates, are we together?
Yes.
That's what? 35. Okay. Where is it though? So give or take, you always check.
Sorry.
All right.
I have a question.
Don't worry. Hold on. Don't forget the question. So you check everything. Which one have you? This one have been treated. Okay. Remember that this effect of this loss would have shown in associate here. Okay. Would have shown the effect of the loss would have shown in our investment when we are computing. All right. So I think with this we are fine. Go ahead and ask your question, please.
I will draw you guys back. I got lost along the way when you said talking
How
about.
do we now find you like this now?
No, it's not far. 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 It's just between how you got the 3 million loss. The whole
How we got
summary
to
of
3?
shipping. Like I got lost there. Screen.
If you get lost, you have to find
the
yourself.
competition. It's more of like this. The 33. Exactly the 175 minus. I don't know how you got it.
This is the 175 here. This is 175 here. Okay. Retained earnings at. Hope you can see what I'm highlighting here.
Yes, I can.
And then what we needed to do, we were looking for the net asset schedule, trying to get the retained earnings as at 1st of April 2014. So the ACTI information told us that there has not been any issue of shares since the beginning of the year. And don't forget, The examiner already gave us the fair value of subsidiaries of Tata's net assets as at 1st of April 2014. It's in the question. Fair value of Tata's net assets. All right. So that was 325. So 325 minus 260 give us the 65.
So the 94 is for the retained earning. 94 is for reporting. Why is this 65 is for the acquisition date? That is 2014.
When was the acquisition date?
April 1st, 2014.
Can somebody help us? When was the acquisition of Tata? When did you acquire Tata?
April 1st, 2016.
16.
Thank you. 1st of April 2016. As at 2014, do we have control? No.
No.
What we only had in 2014 was just an investment. So what we're trying to do is here, as at April 2014, what was the retained earnings? Oh, it was 65. As at 1st of April 2016, it was 175. What was our share of that profit between that time, which will be the difference? Because we did not own, not say we own the company that will claim all the profit. April 2014, that we bought 30% to April 2016. What we own is 175 minus 65, which is 110. That's the profit the company made at the time. We have what?
Control.
We had our associate. We had our 30% investment. So we had to take 30% of 110, which is 33, plus what we paid, which was 120. That gives us 153. But as at 1st of April 2016, that 153 was valued as 150, which means there had been a loss on our investment in Tata as at 1st of April 2016. So it was based on the value of 150. We bought additional percentage. How many percent? 50%. And at that time, we now had what? Control. All right.
Sorry, I want to confirm something.
Confirm. Go ahead.
It says in the additional information that the fair value of the initial investment, 30%, is 150 million as at March 31st, 2017.
The what?
It was the same thing in the 150 euros, April 1st, 2016. But in the additional information, they said the fair value of the initial investment was 150 at March 31st, 2017. So was it the same thing from April 2016 to March?
That's true. That's true. Okay.
March 31st.
Honestly, to be honest with you, that part is certainly an error. Because it should be valued first at 2016. Are we together? Are you with me?
Yes.
Hello?
That part is actually that year. I don't know that particular date. It's really indeed a typographical error because there's no basis of giving us the value of 150 as of 2017.
Yeah, probably the typo error. Maybe if you can see the copy, original exam paper might be different.
Maybe. Because the asset, let me say the reclassification happened in 2016, right? So given a fair value in 2017 is certainly a typographical error. Are you with me? Hello, are you with me?
Yes, sir.
Yes.
Yeah, that's the truth. Thanks for calling my attention to that. That value ought to be March 31st, 2016. Because that's when the status of that 30% changed. It did not change in 2017 because that's the reporting date. It changed at the acquisition date. It changed at the acquisition date. I wish we can get the original question. It changed at the acquisition date. And I think that's why I said I will solve this question with you guys. All right. Are you with me? Can I move on?
Sir.
Yeah.
Wow, it's just for us to prepare the Papa group. It's just to prepare now the consolidated statement of financial position. You know that this is the answer. What I'm doing now.
Yeah.
But you cannot get this without workings. So I always leave my first 2 pages for the answer.
Okay.
That's what I do. ASAT. Why do we prepare statement of financial position as at 31st, as at the day, and not for the year ended? Why?
Because it's accumulated statement. Accumulated statement.
Okay. The answer looks very short, straight to the answer. When you are not Waliola Nekbekun, that will be doing small answer in court. Expatiate more on that statement you just made.
Like it brings all total balances from prior years together.
Okay, yeah. It brings total balances from prior year. Interesting. And that's it. Okay. So it is not just convention. It is because we are dealing with balances from the inception of the business till date. So what's the balances of business asset? Right? So let's move forward. We have the tangible non-current asset, right? So how many are we consolidating here? 1280 plus what?
440.
Plus 280, right?
Minus 25. Plus 25. Plus 25.
Consolidating associates.
I thought you wanted to agree with me. That gives us 1745, right?
To beat us if you say that. I said you can beat us if you make that mistake at this time.
Yes, now I can knock your head. What do you have in Goodwill? It's 30. Okay. Then we have investment in associates. You know that you always put work in, so please always put it to examiner will not assume for you. Examiner will not what? Assume for you. Just the same way justices will not go and get you evidence to prove your case. Investment in associates, 95.
95.
So examiner will not assume that your workings is somewhere, you know, concern them. Current assets.
722, 721.
531 plus what? 190.
190.
Any other thing that affect current assets? Do we have
No,
goods
sir.
in transit?
No, sir.
Nothing, Abby?
No.
Yes, sir.
Okay, so 531 plus 190. What do we have?
721.
721. So what's the total assets then? Oh, I'm so happy we are done. Somebody should give me figure 1745. That's
2591.
Okay. So let's do equity and liability. please solve more questions. So it doesn't mean that everything I can do is correct too. It can be typical. I think somebody shared the question with me that the narration was correct, but the workings they show was not correct in the Pathfinder. Check up.
It's typo error.
And I actually know they don't use the Pathfinder to mark the exams.
Yeah, so share premium is 150. What else? I think we have a revaluation reserve, right?
Yes.
90. We have retained earnings, consolidated retained earnings. That's for 38, right?
Yes.
To give us one value. Then we now look at NCI. Where is this? 99. Maybe so.
Yes.
It will give us total equity. We now look at non-current liability. That's 640 plus 30. This one is 670. Current liability. $1.4 plus 130. 214 plus 130. That gives me 344. So can somebody give me total equity and liability? How much do we have for equity share capital plus 150 plus 90 plus 438? That's 1478 plus 99. That's total 1577.
Yes.
Plus 670 plus 344 2591. Are we together? 2591. 2591. Any question?
Hey.
Just say
Yes.
no question. Any
Yes,
question?
question. Yes, question.
All right,
Can
go
you hear
ahead.
me? My network is not that great. So when you were explaining additional information,
Your network is still not balanced, so I'm struggling hearing you.
I didn't really get you. I didn't really grab.
What I was explaining were additional
information 5.
Okay.
I didn't really get you.
I was saying that as much as I feel that additional information 5 should be included in tangible non-current assets in Tata, which on March 31st, 2016, not 2017.
Okay.
Are you getting? And even for additional information 4 too, the date there should be 2016 or 2017. But if additional information for that is 2017, doesn't even matter. But it should have been 2016. How did you get it?
Yes, yes.
That's what should be there. If not, but then if the question is worded like that too, it can still the same principle of double entry. Because what will happen is this. What will happen is that we will not have this. You said?
I didn't hear you. I didn't hear your question.
I'm saying that even if you take it as 2017, this value will not be there.
exactly why I was confused.
So this would have been 200, right? This would have been
Yes.
200 as retained earnings.
Yes.
So if it's 200 as retained earnings, the post-acquisition reserve will be 10. Okay. It will still, your account will still balance, so okay. The only difference that will come and happen is this. This will now be 200 minus 65. Okay.
Yes.
200 minus 65, that will give you 135.
Right.
Right? And if it gives you 135, 30% of 135,
40.5.
that will be 40.5. Add it with 120. That's 160.5, right?
Yes.
Yes.
If you remove the fair value of the initial investment, that will be what? 10.5. So this will be a gain, okay?
Yes.
So if you add the 10.5 to your consolidated retained earnings, it will give you the value. Your account is still balanced. It's still double entry you're applying.
Okay.
Are you with me?
Yes.
If I'm most likely in the exam on, and this question is worded like this, okay? And I'm very most likely in the exam on, this is what I would do. This land would have been cancelled, all right?
Yeah.
If I am in the exam hall, as much as this wordings of this question is concerned, though, I will not put fair value of land here. So I'm trying to look at it with respect to, I'm looking at it with respect to, how best I put it, to the solution you have in the Pathfinder, all right? With respect to the solution you have in the Pathfinder. But if I'm in the exam, I would not have used this word, this land. All right?
You'd have
This,
removed it.
yeah, because the value of land, the additional excess value was recognized when 31st of March 2017, not in 2016. But I'm only saying it for the sake of, so that it can at least, so that you will not come back. That's why I have to solve this question. Like if I solve it by removing this, you know, what is a Pathfinder is different. That's what I've just explained. Okay. Are you with me?
Yes.
So if you do not, if you take it as 2017, the difference is remove this 25, okay? When you remove the 25, the balance will be retained earnings. It will still be 460 that will be here. All right? Only that 460 minus 495, Abby, it will still give you the same 35. Are you with me?
Yes.
Because land there will be 0. The difference will still be 435. You come to your share of profit. It will still be the same thing, 20% times 35. It will not change. Are you together? The only place that it will change is this place, because you have 200, sorry. You have 200 minus what? 65 times what? 30%. Are you with me? And in the long run, you get your value plus 120, you get your value less 150, and you will get your 10.5 as gain instead of what? Loss. And that's all. That's the only difference that will happen. So if I'm to be in the exam with this question, this is what I would do, and I'll be fine. Even if the examiner now says otherwise, are you getting me? You will mark the step. Is that okay? Guys,
Yeah.
I'm tired of hearing your voice. I think I only have one more or two questions to solve with you. Let's hope that maybe this Sunday I'll be free and then I can solve that question. Most
Okay, sir.
likely